Hello, it's Adil Fazal here, market analyst for CFDs.com. Be sure to visit the website for your trading needs. Alternatively, you can visit cfds.education to certainly learn more. Okay, this is a review of the European markets this afternoon. Obviously, we've had the QE-led rally ever since we've had this leak with regards to the ECB. I mean, if I just drag this across, you'll see 5 things we learned from today's ECB leak, etc., etc. So basically, I mean, the 5 points there. ECB doesn't have a coherent plan. Obviously, they don't have no idea what they're doing. It certainly seems very confused to me, especially given the fact that we are looking at a rate hike from the US. So logically, why on earth would you need to attempt to do any more QE? Because if somebody else can do the job for you, why would you need to do it yourself? That's a simple, logical way of understanding it. If I was a central banker, it's impossible. It wouldn't make sense for me to do any additional QE. To be honest with you, I mean, if you could save your bullet for another day. That's basically your thought process. The ECB wants to surprise markets. There's not much surprising to do, really. I mean, it's pretty evident that individuals are expecting or have factored in, or given the fact that this stellar rally that we've seen, I think have overpriced in excessive QE. That's not going to materialize, especially with the Euro USD now currently still above 1.06, even with this leak. And it's interesting how the leak occurred when the Russian and Turkish situation obviously was certainly boiling, and then obviously we had the French terrorism, which was unfortunate, and it certainly seems like it was some sort of firewall going into Christmas to prevent or attempt the markets to price in that additional QE, and then whether or not he delivers, that's a different question altogether. Okay, now in terms of surprising, how much can you surprise? I mean, this leak has occurred already, so if they wanted to surprise, why would they leak this information out? So they're doing it intentionally to test the market and see how the market responds. That's generally what they're trying to do. Municipal bond buying is still on the table. Again, this is an argument that they're trying to put forward, but again, it encourages irresponsible lending, and we're back to square one. So that certainly is not going to work. Official discussing a split level rate, a contested step that will impose a higher charge on banks, and that's not necessarily weak. That doesn't necessarily lead to a weaker euro. Buying bank loans, this is a pretty big one too, but when the courts, Germans, blah blah blah. So basically, it's something that from given the fact that you've had stronger German data as of late, okay, and given the fact that we had loan growth data today as well, that was stronger, and given the fact that you are going to get a rate hike, are we expecting a rate cut early? I don't think so. Okay, that's my understanding, my interpretation, and given the fact that this whole move has occurred in a light volume environment, it's all circumspect to me. It really is circumspect, and it's very suspicious as well. Okay, so that's my interpretation thus far. Okay, so let's try and decipher the market in terms of the technicals now, given the fact that we've obviously overlooked the fundamentals. Shanghai obviously was negative, Hang Seng negative, Nikkei up by 0.5 percentage point, and the Euro USD still is at above 1.06. So overall, from my understanding, that still classes a risk-off scenario, given the fact that you've got geopolitical concerns in the background, especially going into a weekend or approaching the weekend as well. Right, so the daily chart on the German DAX, obviously we've filled this gap. We have this diagonal trend line which we've held thus far. Okay, it's all about gap fill, and that gap has certainly been filled. There are 2 unfilled gaps below that the German DAX must close, and that they will act as magnets for price action. 60-minute chart at present, you've had a doji, a reversal, evening star, etc., etc. We're looking to potentially retest the breakout zone, and then we'll see exactly where this market will go thereafter. 10-minute chart on the German DAX, you certainly are exhausted in terms of this thruster, obviously move higher, and you are looking for a potential pullback now. Bear in mind you do have an unfilled gap at 11,170, and that will certainly remain in play. That's my interpretation thus far. Okay, now let's cross-reference that move with the MDAX. MDAX on the daily chart still holding resistance. Okay, you can see here we held resistance, topping tail potentially. If you look at the Tech Oil share, bring up a daily chart of the Tech Oil share, and you can see again we're into horizontal resistance and holding. So therefore you are looking at a reversal in European equities. Okay, and this is why I was stating before I did a video on the FTSE 100. If the European markets are into resistance, it's very hard for the FTSE 100 to march higher itself alone, especially given the fact that copper and oil have certainly come off the $42 level and the 212 level, and no real sustained move higher in the Aussie or the Kiwi, and therefore that's considered to be bearish. Let's have a look at the actual French CAC now. The French CAC on the daily chart, again back into that resistance zone on the daily chart. 60-minute chart, diagonal, key diagonal trend line, back into that resistance zone. Looking at the 10-minute chart, you have a break of the rising contracting wedge, looking for further weakness on the downside. Okay, so everything is indicating lower. Looking at the CAC mid and small, again horizontal resistance, you can see that here, and we're certainly holding that zone. Okay, the alternative indices that I always cross-verify my charts with is the CAC 60 or CAC MIG 60, and again you are into approaching horizontal resistance and looking for further weakness. The CAC volatility index, you have an inside bar on the daily chart, so consolidation for a potential thrust or a move higher, so therefore indicating weakness, and you are looking for a potentially stronger euro, given the fact that we still failed to break lower, and therefore that will create a risk-off scenario for European equities. Okay, so the CAC itself is certainly weak. Let's have a look at the Euro Stoxx. So the daily chart on the Euro Stoxx, let's just bring that up first and foremost. Okay, daily chart, yes, we've cracked above the previous resistance, which is quite impressive, mainly due to the fact that we have the situation with regards to metals. That's mainly the main reason why we've obviously experienced that. Now at present you are looking at gap fill resistance on the Euro Stoxx here. Okay, so you have gap fill resistance in this zone, which is currently 3490 odd, I think it was. Okay, so gap fill resistance. You have an additional gap above, which obviously we need to remain privy to. But at present, you do have the inverted head and shoulders. Obviously, that's the overriding factor, and that's based on QE being the catalyst. But in this current interim, given the fact that we have French terrorism and Russia versus Turkey standoff, which could escalate at any time, especially going into the weekend, it certainly is a concern, a major concern. Okay, so therefore you are looking at potentially weaker equity prices. Okay, now looking at the 60-minute chart of the Euro Stoxx itself, yes, we've broken higher, very, very impressive. Looking to potentially retest that breakout zone, and we'll see exactly how market responds thereafter. Like I said, on a weak or light volume type environment that we're witnessing here, and on a anonymous leak as well, it certainly is circumspect. Okay, so again we shall see. It's interesting how US markets will respond, and that's going to be my main focus in the afternoon. Even though it is a half session, even though we do have light volume, it's still going to be interesting how market participants react. Okay, especially going into the weekend with regards to this terrorism concern. Okay, so terrorism threat, etc., levels are certainly increased worldwide, and therefore you are looking at weakness. Now we do have this double top intraday at 3505, and you are looking for weakness. Now the weakness, if we do fall lower, you have 3480 potential support, 3475 around that region. Any breakout level, we shall see exactly how the market responds on the Euro Stoxx. Now looking and cross-verifying that with the S&P 350, you can see that horizontal zone is still there, or resistance is still there on the S&P 350. So Europe 350 should I say, and therefore you are looking for further weakness. Looking at the Euro USD, because in essence that's all about the Euro USD, and you can clearly see the Euro USD at present is currently on the weekly chart, is obviously holding key support. Looking at the daily chart on the Euro itself, you have a doji and a potential bottoming tail, so no overtly bearish pattern there. And the 60-minute chart, you clearly have a higher low being put in at this current juncture, and therefore you are looking for a potentially thrust higher. And higher euro equals weaker equity prices, and that's just the way in which the scenario will unfold. Okay, so from my perspective, nothing overtly bullish for European equities, given the fact that Euro USD is still trading above 1.06. If anything, it's a short squeeze rally based on the fear of missing out potentially on further QE, which really is not going to materialize from my understanding. Again, I may well be wrong, the market may be right. Okay, but that's just the way I'm reading it from an intermarket analysis perspective. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.